Copyright in these lectures is either owned by the ANU or a third party who has licensed the ANU to use it. Students may use the recording for personal study only. No lecture may be communicated online, copied or shared without the prior permission of the ANU.
Yeah. So I'm expecting to see more in the following sessions, because last year I had the class in Leonard Lex building, and in the evening I still see a lot more students here. I'm assuming this is the first week you are still partying, but this time in the morning you should get up and come to the class. I think attending classes and tutorials still make significant difference. I'm absolutely expecting to see more of you being here. All right. First of all, we want to make the acknowledgement of the country. So yes, we acknowledge and celebrate the first Australian on whose traditional lands we meet and pay our respect to the elders of the national people, past and present. Okay. So you're in the right place? Corporate accounting? Excited? Very excited? Yeah, I guess. Who have heard about this course? I mean, do you discuss this one with previous cohort students or not? How do you feel about this course? That's the rumor, yeah. Each year students tell me they heard about the course, how challenging that is, how difficult that is. But I'll tell you some stories. I'm not going to tell you this is very easy. That would be lying to you. But I would say, as long as you exert your efforts, you should have no problem. Probably, this course would be, no other course can be comparable to this course in this sense. So I guess if you examine the efforts and your results, the outcome of this course, that will be absolutely the positive association. That's the linear regression. That's absolutely the positive association. Okay, maybe the other courses you won't see that, but for this course, you will absolutely see it. Every piece of your effort would be rewarded by the outcome. But if you don't exert that much effort, I would say this is not that easy course. All right, so you need to exert your efforts. And your efforts will be rewarded not only in this course, also in your future study and career. Because we are accounting students, at least you studied accounting. I guess maybe all of us are having some major, even if you are not accounting student, you might be a business student related. Is there any student who doesn't have any degree or program related to business? Do we have any student who doesn't have any business program? I guess we all, right? So accounting basically is the language. You need to communicate. You need to use this language to communicate with all the rest of the business world. And we are the key. We are the language. If you don't know the language, you can't communicate well with them. And if you can master this language, you will be the expert. And this career is quite rewarding. Okay, you will get whatever you think you may money-wise and social status-wise, you will be all rewarded. So I would say, okay, study hard, please. Okay. And I guess most of you would be wondering at the beginning how the results would look like. Here are the results from the past 2 semesters. Okay, so you see, somebody may say this course is extremely challenging, but you see, we still have around 10% slightly less for high distinction and 7% for the second semester last year. We have distinction. If you add them up, that's 26%. This is 24%. So that's still quite a large proportion to get distinction, high distinction. I probably forget the credit for this one for the first semester. That will be also around 33 or 34. I think that's 33. At the last semester, probably wasn't that good. The reason I'm not sure, if you look at the students, number, the enrolled number is increased by 24. Unfortunately, that increased number probably all falls in the supplementary field or deferred. So I see a lot, the proportion is relatively lower for the high distinction and distinction, but for these ones that are increased. Okay, so you do see some students are ranked on the top, some students have to be on the bottom. All right, but we definitely don't have this kind of potential rule to say we need to proportionally fill some students. We definitely don't have that. The only efforts we make is try to make you pass this course. Because you are the students in business, we don't want you to fail the course for the business world. That's the language for the business world. We really try to make every effort to make you pass the course. We never intentionally fail any student to meet any proportion at all. Never. All right? But yes, we do see some students fail. And if you actually, those failure rate doesn't include the supplementary ones. So students attending the supplementary, attending the deferred, maybe half of them still can't pass this course. I'm absolutely not threatening you here. Okay, I'm trying to cheer you up. Yes, but half of them will still fail. If you can, please try to avoid to apply for the deferred exam. That doesn't help much because there would be a period the other students are taking a break, enjoy life, and get refreshed for next semester, but you are bearing that huge pressure to prepare for this course, and you don't know the future. Okay, so make sure if you can, don't apply for the deferred. That doesn't help much. But of course, for the unexceptional cases, if you really can't make it, then of course you may have to do that. But from my observation, that doesn't help much. And the pressure just amounted to a level you are going to be crazy. Trust me. Yeah, I saw so many, and many students failed once, twice, 3 times. 3 times, I guess, would be the utmost level the university can still admit you as a student. I definitely don't want to see that. And whatever I can do to help you, I'm going to do that. But it will be your decision whether or not you want to exert that effort to pass the course. All right? If you really aim high, that's also possible. If you look at this picture, this is literally coming from the past student who enrolled in this course. The student said, okay, the exam paper is just too easy, or I may just study too hard because the student got 99. Okay, in this course, whatever we are going to assess you, you will see, except for the group assignment, because that will be some subjective things over there, right? So for all the other assessment, you must have seen it somewhere in this course. I'm not going to examine any knowledge that I haven't taught yet. All right, so every exam question you feel so familiar with, and there is a fixed pattern of answering those questions. That's accounting. We have standards. Okay, so you won't see like some math teacher may teach you 1 + 1 = 2, then they examine you some maximum likelihood regression. We won't do that. So every question you see, every question we examine, you will have already seen that before. Okay, so basically if you work very hard, 99 is possible. But do you want to exert that much effort for the student who got 99? That student did complain the course examination, the assessment, the final exam paper is too easy. The students in the comments, that student said, okay, we stayed in the library day and night, but eventually everybody is going to get distinction and high distinction because the exam paper is so simple, so easy. But eventually we still only see 9% or 7% of high distinction. So that's just not, if you really work hard, you will feel the exam papers are all very easy because they have the fixed patterns. Okay, as long as you work very hard, keep up with the lecture, the tutorials, and every week, when we finish the lecture, finish tutorial, make sure you keep up with that. You make sure you understand the knowledge we have delivered. Okay, otherwise when all the problems, the difficulties amounted to the final lectures, actually before your mid-semester exam, we would have some difficult lecture that may take more than your normal commission to this course. So at that point, you also have a lot of other mid-semester exam to attend, then you won't have that effort. Then you will be struggle, you will feel frustrated. Students sometimes vomit in the exam site. That's not exaggerating at all. Okay, I'm not trying to, again, threaten you in any way, in any intention, but I do encourage you to work hard. This is what the course requires, okay? Only when you understand the knowledge we teach you, the skills we show you here, you can do better job in accounting. We do involve, the accounting do involve judgments. But perhaps at this level, we first requires you to understand the standards, to know how to do accounting according to those standards. All right? So make sure you understand that. You can use that pattern to solve all the problems. Then you will become a more advanced accountant one day. Okay, so like I said, this is the language. You need to understand the grammar, the structure, and the vocabulary for any language. And most of you, I can see you are international students, and your mother language is different from English. So you have no problem. Now you are at NU, the top university in the world. So you have no problem of learning any language. It just has some certain structure. You have the financial reports that's structured. You have certain grammar. You know how to get that number over there. And you also have certain vocabularies. That is the terminology we use in accounting. So you definitely have no problems at all, okay? There is no IQ challenges over here at all, but there is an effort challenge, okay? So yes, the typical language we use in accounting, we describe a 90-year-old accountant. We don't say that's an old man. We may say that's someone at the end of their useful life, right? So this is kind of joke for accounting. And for your machines, vehicles, we all have the useful life. That's the accounting language. You don't really see much of the useful life in other settings, but in accounting, we use a lot for the fixed assets, right? So that's the language we need to have. So you need to understand what we are talking about, all right? Okay, that's about a little bit of challenge of this course. That challenge is only towards your efforts. There's no, again, no intelligence challenges at all. Okay, no math challenges at all. When I talk to people, once I took a taxi driver asked me, what do you do for your job? I said, I'm teaching accounting. Then the guy told me, oh, you must be very good at math. I said to myself, I didn't say to that person, I said to myself, the math required for this course is only to the level of the primary students. If you are sixth grader, you should be fine with the math. Do we involve very complicated math? Not at all. Only when we do the present value calculation, we may involve a little bit discounting. But if you don't know how to do each one, we know multiplication, right? We just found out that discounting factor, we times them, then we got the results. So there is no math challenge at all, okay? But we do need to follow a rule to do some calculations for some numbers, for some amount, for some accounts. Clear? Okay, so that's about the course. Here, this is me. I'm Xu Yizhang. Just call me Xu. I've been teaching this course for this probably is my fourth time of teaching this course at AU. I've been teaching in China, in the UK before. So yeah, I joined AU for 2 years now. So yeah, you probably haven't heard about me. Yeah, but this is me. And my research interest is in financial reporting disclosure and financial statements and some enforcement actions like the accounting fraud, accounting restatements. So this is about me. If you have any other projects you want to discuss, research project discuss, you are also welcome. All right. So my consultation hour is Wednesday. So it's in the day of our teaching, our lectures. And one reminder, if you want to see me, if you come, I would suggest you come to see me during my consultation hours, because we do have the construction, you know, that arouses a lot of troubles, and I have another temporary office. The two offices has quite a bit distance. So if, yes, you come to see me beyond the consultation hours, I may not be in my office, it might be another one that you probably couldn't see me. So if you really can't make it during the consultation hours, please drop me an email. All right, then yes, we can arrange some other time. Okay. Yes, we have the best team for you as the tutors. All the tutors are experienced with this course, so they may teach this course for 2 rounds or 3 rounds, and they are all very experienced. They are equally good. So when you are doing, I'm going to upload the consultation hours on the website later. So not yet decided, because some schedule is still pending due to the student enroll number. We haven't seen the expected number, so we haven't opened some new slots yet. And I will not accept your request for changing tutorial due to your likeness or dislikeness of any tutor. Okay, so professionally they are also good. So I will not change any tutorial for you just because you maybe like or dislike some tutor. All right, and here are the tutorial schedule. I would like to apologize first, because some of you send me emails requesting for tutorial enrollment, maybe changes, or maybe you couldn't find some capacity for some tutorial groups. I replied them, but sometimes when I'm not in the office, I couldn't check the portal in an efficient way. So I perhaps saw your email but didn't reply. But then when I searched the unread email, I couldn't find yours anymore. So if you still have issues, send me emails again, because I did search and couldn't. I remember some emails I haven't replied, but make sure if that's still needed, make sure you send me the emails again. All right. And for tutorials, yes, I understand some of you are still not able to enroll, or some of you want to change because you realize you have some conflicting schedule for other classes. I need hard evidence for that. Okay, if you say I have conflicting schedule, you need to screenshot that schedule to me, then I might be able to facilitate for the changes. All right. However, just wait until this Friday, because we still have some new tutorial slots to open. Okay, we are going to have someone in the evening, perhaps 1 or 2. They are not yet open, but they are about to be open. Okay, so just wait until Friday. If you still need to change, if you still need to find a available slot, then let me know, because by Friday we should be able to get the fixed schedule at that time, or then we will see more numbers. Okay, so wait until Friday. Then if you still have issues on the conflicting issues, send me the hard evidence. I will facilitate that. All right. If you can't enroll in any, just wait a little bit, because we are still opening. All right. Yes. So that's about the administration of this course. Do we have any issues? Any questions? Are we all okay? Okay. So this is about the course details. Actually, I have uploaded. Did you check your portal frequently? Yeah, make sure for the announcement, whenever we have some announcement, I'll post that on Voto. So make sure you use your Voto. And each week I'm going to upload the lecture notes before the class starts. This week was a little bit late. Next week, I will guarantee you, I will upload by Monday. Okay, before Monday. If not before the previous week's Friday, if I couldn't make that, I will guarantee you I will make them available by Monday. Okay, so you will be able to get access to the lecture notes by Monday. Similarly to tutorials. For the tutorial week, you will see the tutorial question. If not in previous week's Friday, you will see them on Monday. All right? So the course covers a couple of topics. The first one, we are going to discuss the characteristics of the Australian accounting environment. Since what we are learning here is Australian accounting standards, you need to know who your bosses are. All right? So we need to understand the environment, the regulation requirement. So that's about one topic. Then we are going to spend 2 lectures to discuss the regulatory environment and the regulator things for this course. Then we are going to spend another week to discuss non-current assets. Do you feel familiar with that? Non-current assets, absolutely, I heard about it. You studied your prerequisite course, right? We all know non-current assets, fixed term one, and they have their useful life, right? Then they will have the depreciation. This is what you have learned. And depreciation method, we have different ways to do that depreciation, right? And we may have residuals. So that's what you have learned. Here, what we are discussing, we won't repeat what you have learned. Otherwise, your knowledge won't be enriched, right? So we really want to enrich your knowledge. So we only bring the advanced topics for non-current assets, such as the revaluation and impairment. We all know the fixed assets could increase their value over the time, right? This property may last. The property will last much longer, but the machine, the plant may last, let's say, 20 years. During the 20 years, the value changes. Do we need to revalue, or we always follow the historical cost? That's the issue, right? So we will do revaluation. We will discuss more details when we are there, okay? Then we will have the impairment issues, because the building probably got impaired. Could be coming from the flood, the fire, or some human beings' behavior. Whatever reasons, we might have the impairment. So we are going to discuss that as well. So these are only the advanced issue. So when we are there, we actually don't touch a lot on the previous course. So you do need a little bit knowledge, but I would say it's still largely independent from what you have learned in previous lectures. You shouldn't worry much if you haven't done very well in previous course. You just check your previous textbook. If we were there and you found yourself maybe a little bit lost in prerequisite knowledge, then you just go back, have a quick check. That should be enough. All right, so we don't require a lot from previous. Okay, but you do need to understand the terminologies, the terms we use here. That should be enough. All right. And if I feel so that's why the participation in the class is very important. If I feel a lot of you all got confused, or maybe most of you forgot whatever you have learned, then I might be able to brief you on that if I see your confusion face, okay? Then we'll talk about a little bit about intangible assets. You probably haven't learned much. We'll just touch part of that. We don't cover the entire topics, but we will touch a little bit on that. And we will have accounting for leases. Have you heard about leases in accounting? Okay, basically in your life, you are all doing leases because most of you might be renting an accommodation, renting a house, right? So that is the leases. But in leases, we do have sometimes, you find leases probably it's not just that simple. I just pay my rent, then I can use this house. Sometimes company uses the leases as a way to finance their business. How? Simply think about some cases. If this company can rent this house for 50 years, and eventually or 20 years, then after 20 years usage, the house will belong to this company. Then think about the nature of the transaction. Is that something just like I borrow your house and I pay you some loan? I borrow something from you and I pay you some mortgage, then eventually I will get that. So many companies are doing that. Then those kind of transactions shouldn't be treated as the operating transaction. That is the financing activities. So in that sense, lease should be dealt with as the financing policies. Then we will have the financial leases. Okay, we are going to discuss that. I guess this might be something new to you, but yes, you would be happier because then you will feel some way, okay, I got more methods, more ways to finance my business. You might be happier, right? If you want to have some business, right? Or you can tell your boss, okay, we have some other ways to do this. That's better, right? And we have accounting for income tax and contingent liability. Let me see, owner's equity. These would be the first 6 lectures. Most of students may feel income tax is a little bit challenging. Why is that? Because income tax, the tax has a different base from accounting, right? What is the accounting base? What is that? Accrual. Yes, accrual. We have accrual. What is accrual? So like I purchased a car today. I pay 10,000, suppose that's a second-hand car. 10,000 I pay. Shall I recognize the whole expense today, 10,000? In accounting, perhaps we don't. Why we don't? Because I'm going to use that car for 3 years. Expense should be only for this year, right? If we do this for the next 3 years, how can we realize that expense distributed across the next 3 or 5 or 10 years? Including the expense, accruing the expense, we use the depreciation. Do you see the sense why we have depreciation for fixed assets, non-current assets? That's why we do depreciation. When you have depreciation, you don't really pay, right? You don't really have cash out. You only recognize that in accounting to match that expense for the benefited period. Okay? So that is the accrual accounting. This expense is accrued in this period and for the following periods. Okay? That's the accrual accounting. For tax, largely different accounting, it may be based on the cash basis. So you need to do the adjustment from accounting to tax base. That got the issues a little bit complicated, but also you can overcome that. Okay? So that's the first, the lecture 5th would be about income tax. All right? Then we will have contingent liability and owner's equity. So these 2 lectures are about the financing sources you have, right? Liability. And liability you have learned. So we don't do bond, we don't do debentures, we do this contingent liability. All right? And we will have the equity. Equity you have learned about share capital, right? And we will discuss the issuance of the shares. And when we have the share split, when we have stock options, how shall we deal with those issues? Okay, those are just the real life. What you have learned in prerequisite course is the most simplified scenario. And now we just get a little bit more into that, okay? And if you have more advanced issue, if you go to work, you have a little bit more complicated factors into that. But now we just gradually increase the complication of the reward into your learning scenario, okay? Then we, after the mid-semester after the break, we will have the consolidation issues. So the consolidation issues, have you heard about that? Not yet, that's good. So the rumor hasn't spread over here. But the most challenging part is coming from the second semester. Okay, that's why I ask you always keep up with the lectures and tutorials. Don't accumulate all your problems until the end, but especially in the consolidation issues. You just keep that in mind from the very first lecture that might be in your mid-semester exam period. You still need to attend the lecture and tutorials because from the very first part of the consolidation, you don't want to get lost from the beginning. Okay, it starts with some simple things, but gradually we'll introduce the consolidation. Why we have consolidation? Think about that. If you are a one company, you are running the company by yourself, that's easy, right? You have accounting, maybe you have non-current assets, revaluation, repairment, income tax, whatsoever. That's the issue for one company. But how about you have a parent? Shall the parent in the parent company, right? Shall the parent include your assets, liability, equity into their account? If they don't, then seems like they are not telling their investors the full picture of their business. So they are controlling you, controlling the subsidiary. They should benefit from this control, right? But they didn't reflect. If they don't reflect that in their report, that would be misleading. That wouldn't be a complete picture. Then they need to reflect that. Then how do we do that? Okay, that's about the consolidation issues. Then first of all, it's about acquisition, merger acquisition, parent subsidiary. Then, so that's purely coming from acquisition and how do they consolidate their accounts. Then we will discuss, they too may have some other transaction except for that first acquisition. They may have some transaction, all right? The parent is producing machines, the subsidiary may be produce some product from that machine, so they may purchase the machine from the parent. Okay, that's the intra-group transaction. And they may also have, they may just have some equity investment. It doesn't involve parent subsidiary. I just invest maybe 20% or something. So how do we deal with these issues? So that is coming from the second half of the lecture. All right, of this course. Okay, the learning outcome, I wouldn't emphasize on that much. So you would expect each topic you get some more advanced knowledge and skills of accounting. And some outcomes involves the analysis of the complex issues, which is about the group assignment. Group assignment details I will announce in lecture 3, so you don't need to worry about it now, okay? And yes, it will help you for the verbal and written communication skills. Make sure the group assignment, I will require 3 members in each team. No more, no less. 3, okay? So you can start to think about to get your team members, get your team built up now. All right, 3 members. Yes, your commitment, this is just the minimum requirement, okay? So every week we have lecture and tutorial, make sure you attend. And the tutorial, I will have the attendance check. All right, the attendance check is not compulsory. The attendance is not compulsory, but eventually, if your results is at margin, perhaps when we do the whole consideration, if you get 44, then your attendance are all good, we may consider a 45. You know what I mean? Otherwise, we don't really, we need to check the combination of all the assessments. All right? And yes, 6 hours a week for your private study. Whenever you finish, you reflect, you study by yourself. That will be also the minimum requirement. However, if you can focus very well, these hours should be enough. If when you are studying accounting, on the other hand, you have your mobile, you check your FaceTime, Instagram, you check your WeChat, then 6 hours is definitely not enough. Okay? Make sure you purely focus on that, turn your mobile off, then you should be fine. Absolutely fine. Okay? And if you have any questions during lecture, make sure you just raise your hand because your question, there's no questions are too simple to be raised. Okay, the other students may have the same confusions. So just make sure you don't keep your questions until the last minute before your exams, all right? And don't expect me to reply your emails within minutes, okay? So normally 2 working days should be fine because we do have other commitments. We have research students to supervise and some administrative committee things to do as well. So make sure you have some of the expectation. Don't get your expectation too high. Some students send emails 1 minute and 20 minutes following up why you don't reply me, because we really have some other things to do as well. All right. And for the urgent ones, please don't try to avoid the urgent request as much as possible. Because some students just 1 day ahead, just the day on the tutorial is supposed to be at 12 o'clock, you send me email at 10 o'clock, say, I can't attend the tutorial. How can I respond? I'm probably just in teaching, all right? So maybe not able. So try to avoid as much as possible. But if there is really urgent issues, we might try to deal with that with the urgent manners, all right? I always suggest you to prepare tutorial questions. For the first couple of weeks, you may feel fun. The amount of the exercises are not that much. But for the following week, you will have different types of questions. Any tutor probably will not be able to address all of them. But I still provide them so that you can get more practice, more exercises, and I will provide solution. But if you prepare for them ahead of the tutorials, then you can raise questions to tutors, because our tutors will be preparing for all the questions. But they may only address the most important one, or may only address the one confuse you the most. All right, so preparation is always good. And tutorial solutions will also be provided. So here are some assessments. Now I make it here super clear. So don't ask me again about what should be covered in the quizzes, what should be covered in the main semester, what should be covered in the final. They are all super clear here, okay? So we have quiz 1 in week 5, quiz 2 in week 10, and what they examined is the lecture before that week's tutorial, okay? And the main semester will only cover 1 to 5, so the 6th lecture will not be covered as the examinal content for your main semester exam. And the last final exam covers from 6 to 12 inclusive, okay? So the lecture 6, still make sure you attend. It may not that be important for your main semester, but it still shows in your quiz, still shows in your final exam. Okay, so make sure you do have them all covered. And mid and final are compulsory, so you must attend, all right? The others, if you decided tutorial, quiz 1, quiz 2, I don't care, then perhaps you don't care. Okay, but you may find every marginal mark would matter eventually, all right? And here are the textbook. You can click the link to purchase them, hard copy, electronic copy, or you can go to the library. We provide at least 6 copies of textbook. If you are lucky enough, you probably can just check if you can get them, all right? Or we still have the electronic version for each chapter if you prefer, all right? So here is the first lecture. Some of you might be expecting a break. Have you heard about that? No, not yet, right? That's the worst thing about me. Probably I won't give you a break. The reason for that is the content is just too much. And I want to talk a lot. I think that the 5 minutes of my talking may save you 1 hour's effort. So I prefer keep talking if you don't mind. Or at some exceptional cases, I may give you 3 minutes break. That's what I can offer. So normally I'll keep talking for 2 hours. At the end, you will feel big relief. Eventually, don't need to see me anymore. Don't need to hear me talking anymore. But now, I just want you to imagine that happiness at the end. Then now you might be able to bear my talking a little bit. Okay. So think about the end happiness. Yes, please. So I might be keep talking. All right. Okay, so the chapter 1. We are talking about accounting regulation. The textbook is coming from, this is actually just chapter 1 from the textbook. So you can have look for more details if you wish. So this is talking about accounting regulation and the conceptual framework. Have you heard about conceptual framework? Maybe not yet. That's the overarching principle for the accounting standards. We'll talk about it later in a minute. All right. So first about the regulations. Parts of that you may have already learned from other courses, like your commercial law, or maybe from prerequisite course. So I will just quickly go through them. If you have any questions, raise your hand or your voice. All right. So we are talking about nature of company, forming a company, types of companies, and the need for accounting regulation, the key sources of accounting regulation, and Australia accounting standards, international accounting standards. We are talking about accounting standards in Australia. Why do we care international accounting standards? Why? Have you heard about the IFRS, International Financial Reporting Standards? What's the relationship with the accounting standard in Australia? The same, basically largely the same. We have adopted the International Financial Reporting Standards in Australia since 2005. Okay, but we still have something a little bit special. So we have, but most of the part we have adopted. We just have a little bit extra than that to fit into Australian accounting environment. Okay, but largely they are the same. Then we will talk about the conceptual framework. The nature of company is just a legal entity, right? And they incorporated via the registration. Do you know where to register if you want to have a company? ASIC, right? Australian Securities and Investment Commission. You register over there, you get your ACN number, right? So that's the registration. And the company has the following attributes, like limited liability and their own separate legal existence. So they can be sued or they can sue somebody else, right? They can sue other companies or other persons. That would be fun. And they have the legal powers of a natural person. They have rights to own assets and enter contract. They are not persons, but they can sign some contracts, right? They just need some legal representative. Okay, just a quick examination of your understanding of the company. All right. So what does it mean that a company has limited liability? I'll give you 1 minute to think about it. Which one you choose? C. Shareholders are legally responsible for the debt of company only to the extent of the nominal value of their shares. Any other answers? D. B. So only some shareholders are legally responsible for the debt of the company. Only managers are legally responsible for the debt of the company. This is absolutely wrong, right? Managers only managing the company, representing shareholders, right? So they are not legally responsible for the debt of the company. But are they responsible for using the debt? Yes, if they got some problem, they misuse the debt, they might also be sued, right? But they are not legally responsible for paying back, all right? And only some shareholders are legally responsible. One share, one vote. They should be all equally responsible, right? Shareholders are legally responsible for the debt of company only to the extent of the nominal value of their shares. And shareholders are legally responsible for the debt of the company only to the extent of the part of the nominal value of their shares already paid. So C or D, are they responsible for the nominal value or only the paid part of the value? In Australia, it's allowed to have the installment for the shares. If you purchase a share, you can pay maybe $2 a share, you can pay 50 cents in the first time, $1 in another time, and another 50 cents in the following days. Or that's allowed. Then the question is, if the shares is $2, now if they only paid $1 for the share already in the company's account, when the company goes bankruptcy, are they legally responsible for the $1 they haven't paid or for the only to the $1 they have paid? They should be responsible for the full nominal value. Okay, so no matter how much you have paid, but the whole nominal value should be collected. They should be responsible for that. But beyond that, so if all the shareholders' equity has been liquidated, then you still owe debt holder money. Do you need to get money from shareholders to get the debt holders paid? No, because that's limited liability, only limited to the equity you invested. Okay, but that investment should be to the nominal value of the shares. All right. Okay, next lecture, I'm going to use this small app called Pool Everywhere. You can download it in your devices. So either mobile or your iPad, you can get that, or any other tablets, you can get that. Then we can have the interactive participation. So whenever I show some quiz here, you can enter your answers to that. So that is a lot more fun. All right. I will not give you time here now, but you can do that after class, all right? And forming of a company, you just simply send some application form to the ASEC, then you can get the certificate of registration, then you get your ACN number. Have you heard about ACN? That is the company registration number coming from ASEC. And you may heard about ABN, have you? ABN is the number you have, Australian business number, that's coming from the ATO, Australian Taxation Office. So that is for your tax files, okay? So don't be confused by ABN and ACN. ACN is for your company registration, ABN is for your tax files, all right? Yes, to deal with the issues relating to directors and members and day-to-day management, company could have the constitution according to the Corporate Act, or they can have the replaceable rules that's regarding the day-to-day management and operation. Okay, so I believe those issues you probably have those kind of background knowledge you may have already have. If you don't, you simply scan the code here. You scan them, you can have a more detailed check. Okay. And companies, types of companies, we have public companies, we have proprietary companies. So when we say public companies, they are having some kind of public accountable issues over here. They could either issue some equity or some debt to the public, so they get this public account, they publicly accountable to some users, right? To some investors. So they can invite public to subscribe for their securities. And the minimum member is just one, and no requirement for the maximum members of shareholders. But they require the company has at least 3 directors. Okay, this is the public company. They don't necessarily to have the share capital. It might be a little bit confused. You might be a little bit confused. If not by share capital, by what? they might be limited by guarantee. What do we mean by guarantee? If they are a trust fund, if they are a charity organization, they might be just limited by guarantee. Okay? Otherwise, share capital. Clear? And they can list, if they are a public company, decided to be listed on the Australian Security Exchange. All right? So the ASX is the platform they can list, they can raise money publicly. All right? And also, if you are a public company, you register as a public company, you must prepare financial statements according to the accounting standards. And also, you need to have them audited. All right? Relative to the public company, proprietary companies' requirement for reporting will be relatively simple. They probably don't need to get this statement audited, but it depends on what kind of company they are, all right? The minimum member is 1, but they have the upper level limits, which is 50. And they only need 1 director residing in Australia. They can't respond from public, but they also require to have a share capital. So they also divided the whole equity into shares, all right? And they could be classified as large or small. If some company meet at least 2 of the following criteria, they can be listed as the small one. If their annual gross operating revenue is less than $25 million, the gross assets is less than half of this number, 12.5 million, or the number of employees is less than 50, they can be classified as small proprietary company. Why do we care, small or large? Disclosure, very good point. Anything else? Tax, very good. If you're a small company, you don't face that much disclosure requirement. Okay? If you're a small company, in Australia, current tax rate, you only need to pay 27.5%. A large one may have to pay 30%. Okay, so it makes difference. Okay, do we need accounting regulation? If we don't need to learn the standards. We are all free now, okay? But we may also free from any jobs. We may just become unemployed, right? So regarding whether or not we need accounting regulations, there are 2 perspectives. These 2 perspectives are still debating with each other. So it's not about shall we have or shall we not have. It's about how much we shall have. Most likely it's about how much we shall have, right? So they believe one free market perspective believes there is no need for accounting regulation because they believe this is free market, the demand and supply can just meet at the optimal level. So we don't need to regulate, all right? And there are private economic-based incentives to provide the information without the regulation. Do you know how did auditing develop? It's coming from the free market, actually. So nobody originally required a company to be audited. That was back to the Britain's development. They have raised a lot of money because that time they were building the railway, all right? Due to the industrial reform, so they were building the railways. Then they raised a lot of money from investors, and some of them you can imagine there was no regulation, so they can just simply take their money away. That would be accounting fraud. Or they can just use their money poorly, they didn't manage well, then they probably went bankruptcy, but they never let these investors know that. Okay, so in that case, then eventually, some companies really want to show they are good. So they ask their reports to be audited. So the auditing just occurred. Okay, so that is coming from the free market perspective. So in that sense, they think, okay, they do have the private economic incentives to provide information without the regulation. So this is one opinion from the free market. And they think without regulation, entities would still be motivated to provide both good and bad news. This is somehow the argument against the another regulation part, because the other party believes if you don't provide, if the regulators don't require them to disclose, they may simply just disclose good news. Then what? If they only disclose good news, then what? The lemon market. Did you learn economics for the lemon market? So that's for the car insurance. So if only good news are disclosed, but we do know in reality it won't be all about good news. There must be some bad news, right? So only good news are there, so people will suspect it. Okay? If people suspect it, then they may just hesitate. All right? But there is some bad news, so they will treat the good news maybe also as the bad news. Eventually, the market will only be left with the firm who wants to cheat. Okay? And the others probably don't want to participate in this market anymore. That's about the car picking, the peach or the lemons, right? Eventually, only the bad car over there, okay? And they might be overpriced, then the market fail, okay? So in that sense, the other party argues that if there is no regulation, the market will fail. But this party believes without regulation, we are still fine because they might be also motivated to disclose both good and bad. That's based on their expectation. They will expect the investors' responses, then they will act in a better way, so that they will disclose both good and bad. All right? So this is the argument. And financial statements audit can be expected in the absence of regulation, exactly like I talked how the auditing evolved, right? So, and they also believe only the managers are in the best place to decide what to disclose. So the others' requirement may just ask some unnecessary information. So they believe the market should be free. You don't need to have the regulations. The other party just pro-regulation. They believe because accounting information is a public good means once it's available, everybody can use it free, right? We will have a lot of free rider. Then the demand will be underestimated. So you won't meet the optimal level of the supply demand. Okay? Based on that, they said, no, we need regulations. All right? And so they need regulations, and the regulation required to alleviate the effect of market failure. So this is directly against the previous discussion for the lemon market. So they believe we need to have regulation. Otherwise, they may just only disclose the good news and the market will fail. All right? And they also, because the other parties say on average, the market will be efficient, they believe that ignores the rights of individual investors who might lose as a result relying upon the unregulated disclosure. Yes, eventually on average the market might be still efficient, but when we get that efficient results, in the way of getting that results, some investor may have already committed suicide because they don't get the proper information, the relevant, reliable information. So that's why they think we shouldn't sacrifice that much to get the market adjusted on average that's efficient. All right. Then the ability to obtain information also depends on the control of the scarce resources required by the entity. That could be the argument that the debt holder, the shareholder, so when you are close to the company, you probably can require some information, but some other general purpose when investors from public, they probably won't be able to require that information, then that's unfair. So from that point of view, they say regulation is needed. Yes, now it's not about now the current this debate about that. It's not about shall we just forfeit the whole standards at all. It's about how much we should regulate. So it's still debate, that's still interesting topics to discuss. All right. So another quiz. Let's have a check. Arguments against regulation of accounting information include a quick check of your memory. Which one? D, the last one. Another? Yes, congratulations. So the first one, mandated disclosure are expensive. It's not discussed, but that's also true. The mandated disclosure are expensive because you require to disclose. They may not, but we don't know really the manager want to disclose that much or not. If you don't mandate, ask for the compulsory disclosure, they may also want to disclose, right? So we are not sure comparing to the management initiative disclosure, whether or not that's expensive, right? And also it says these are expensive to provide, and being forced on the company will devalue the worth of the information. The information won't be devalued, right? Simply because you disclose it, right? So by making so many choices of accounting methods available under the standards, the information provided won't be comparable. What is that? It's not about we should have regulation or not have, right? The issue here is making so many choices of accounting standard method. That's about how do we set the accounting standards, right? Shall we give less choice? Shall we give more choices, right? It's not about shall we have regulations or shall we not, okay? Companies will be motivated to disclose good news, but not disclose bad news if they are not forced to make the compulsory disclosures. So this is the one pro-regulation, right? This is not the one against the regulation, right? Against regulation, they believe managers are in the best place to determine what information will be disclosed, right? So the answer would be D. Those in-class quizzes are very similar to what you can see in your quiz papers. And all the quizzes will be in class, in tutorial class. Before you finish, we need 10 minutes before you finish that tutorial, then you attend your quizzes, all right? And the sources of accounting regulations. The major sources of financial reporting regulations in Australia include Corporation Act. Okay, Corporation Act always, basically in every country, that will be regulating the accounting financial reporting, right? And Australia accounting standards and the conceptual framework. Normally, conceptual framework and accounting standards will be together. The reason I will explain what is the conceptual framework in a minute. And if they are listed company, they list in ASX, they need to follow their listing rules. Okay, so these are the major sources of financial reporting regulations. And the main bodies that formulate or enforce accounting regulation in Australia. So basically, if you are in the industry of accountant later on in your future career, these are your bosses, right? So the ASICs, the Australian Security and Investment Commission. What else you can name? Name several of them to see which are the main bodies that formulate or enforce accounting regulations. they will help to shape the accounting standards in a way, right? What are they? What bodies do you know? ASIC, I listed here. We must have a standard board, right? We need to have the standard board who can set the standards, right? WASB, not yet, okay. The Australian Accounting Standard Board, they will set the standards, right? So that should be one. And if you are listed, this is ASIC, right? And what else? WSB has a boss. They need somebody to supervise them, or we need somebody to supervise the standard board, right? Make sure they are not driven by one single party, right? To favor that party's interest, right? So their boss is the Financial Reporting Council, okay? So this one also helps to regulate the accounting regulation. Then another one is the Australian Prudential Regulation Authority. This is the one specifically for financial service industry. All right. So ASIC, it is the Australia's corporate market and financial services regulator. They undertake the financial reporting surveillance with the purpose of improving the quality of financial reporting. So we, as a company, if you need to report your financial statement to somebody, this is that somebody, okay? So ASIC is the place you need to file your annual reports. You need to let them know your audited reports, okay? And the role of ASIC is to enforce and regulate company and financial services laws. They administer and monitor implementation of corporation acts, and investigates and prosecute for breaches. They promote confidence in the financial system. If you are interested in more information, scan the code, okay? ASIC's listing rules help ensure that information is disseminated in an efficient and timely manner. So the place they involved in accounting, actually the listing rules has 20 chapters. But 2 chapters are related to the financial reporting class, okay? Chapter 3 and Chapter 4. Chapter 3 is about the continuous disclosure. Chapter 4 is about the periodic disclosure. What do we mean continuous disclosure? Do we need to report our everyday transaction to somebody, to the ASICs? We don't do that. However, if you have something happen which is going to have material effect on the users, you need to disclose timely. This is called continuous disclosure. All right. And the periodic disclosure, how many periodic disclosures you know? We have annual disclosure, half year, semi-annual, half year, quarterly, right? So normally, those would be the disclosure requirement. Not every company needs to have these half-year, quarterly ones, right? They will have different requirements for different firms, all right, when they meet different criteria. WSB, Australian Accounting Standard Board. Australian Accounting Standard Board operates from 1991, and they were replacing the Accounting Standard Review Board. If you see the Accounting Standard Review Board, you will understand that is the predecessor of this WSB. All right, sometimes when you are checking some standards, you may see the old standard, the old standard status. Okay, so if you are familiar with those words, those bodies' name, you probably will get that relatively easier. Then you will get the newest information. All right, their function includes developing a conceptual framework. conceptual framework here again. They need to develop the conceptual framework. So now you see accounting standards are coming from WSB, and conceptual framework is also coming from this WSB. Okay. However, for Australian standards, they adopted from IFRS. So do they do that for the conceptual framework? So conceptual IFRS has a conceptual framework, Australia adopted. Okay, so that's the case. And we also developed a little bit. Okay, so that's their role to develop the conceptual framework or to adopt that one, right? And making accounting standards that have force of law. What does that mean? Now you know accounting standards, many industry standards doesn't have the force of law. Accounting standards does have the force of law, which means if you disobey with accounting standards, that's criminal. You are violating the laws, right? You are violating the laws. So that's what that's accounting. That's the meaning of the force of law. All right. So accounting standards have the force of law, and this WSB also formulate accounting standards for entities not governed by the Corporation Act. If they are not governed by the Corporation Act, what could be those kind of entities? Corporation Act is for corporate, right, for business. What else? They may not be regulated by Corporation Act, but they still need to follow accounting standards. Charity, yes. Not-for-profit organization, yes. Government, yes. Right? They don't need to follow the Corporation Act, but accounting standards also set for them. All right. Participate in and contribute to the development of a single set of accounting standard for worldwide use. So actually, Australian accounting bodies are one of the first group of developing the international accounting standards as well. So if you track the Australia's accounting development, that has been a very good success. They have achieved a lot. If you look at the world's top accounting researchers, many of them coming from Australia as well. If you look at the Ball and Bronze paper, if you do any accounting research, the 1968 Ball and Bronze paper kind of the foundation you have to read. So that's accounting researchers. And again, for accounting standards, we also have big achievement and contribute a lot to the international financial accounting standards. All right. So now that's still the aim, to participate in and to develop, to contribute the international standards. Yes, the boss of WSB is this first, the Financial Reporting Council. Financial Reporting Council. The Financial Reporting Council, they have some power. They provide the oversight of the process of setting accounting and auditing standards. And they appoint the member of the WSB. And they approve and monitor the WSB's priority, business plan, budget, and staffing. They give WSB directions, advice, and feedback on matters of general policy. Do you think they will do the standard set? They will set up the standards. There's nothing mentioned here, right? They oversight the process, but you need to understand they have no power to direct WSB in any particular standards. They don't set up standards. They just oversight the standard setters always. And they have no power to veto a standard formulated and recommended by WSB. Who has that power to veto a standard, you think? So the WSB set up the standard, they formulate a standard, they need to get approval because this is force of law, has force of law. They need approval. Who can say yes or no? I think you're right. Oh, no. The law needs to be approved by Parliament, right? Commonwealth Parliament, all right? Because this has the force of law, so they will say yes or no, right? But that's not the Financial Reporting Council, all right? Oh, okay. A quiz? Just an examination to check your quick memory. I actually specifically mentioned that. Is this true or false? The role of Financial Reporting Council is to provide broad oversight of the process for setting standards in Australia, including the authority to direct the WSB to develop, amend, or revoke a particular standard. Is this true? No. They can't direct any specific standard. They can't say yes or no to any standard, but they oversight the board, the WSB, right? They oversight their directions, their priorities, right? But they don't have a say on their specific standard, okay? Next time, I would suggest the student who at the back rows come a little bit forward, because this is so large space here. My eyesight can't reach you. Then sometimes when you are not caught by my eyesight, you may just be caught by your mobile. So yes, trying to be moving a little bit forward, then yes, we may have better interaction, or it might help your study. Okay, yes, this Prudential Regulation Authority, like I said, they are the regulators for financial service industries in Australia. And the aim of the Prudential Regulation Authority's supervision is to promote financial stability by requiring institutions to manage risk prudentially. And they identify the key risks taken by entity, and they need to make sure the adequacy of the entity's financial resources to accommodate potential losses. If you are working in any financial service industry, this body you may need to pay close attention to. And the Australian accounting standards. So now we know WSB set up the standards, then we have the Australian accounting standards. And the current accounting standards adopted from the IFRS, right? So now it's clear to us. This standards is developed by WSB to provide financial information that can allow users to make decisions about the allocation of the scarce resources. And they should help the director to discharge their financial reporting obligation. If you are saying, I'm making accounting flaws, I'm manipulating my accounting numbers, sorry, no, because I am following the accounting standards. Okay, so they help them discharge their obligations, and it's relevant to assessing performance, financial positions, financing, and investment. Is this okay? Because if I don't have financial figures, I don't have accounting information, how do I know if the management are doing good? How do I know if they are increasing shareholders' value, right? So they need the information to assess their performance, and they need to understand how well the company is doing. That's about the financial position, right? And they need to understand how do they use the money they raised, and how do they invest. How is the investment results good? So these all relying on accounting information. That's why I said this is the language you use in the business world. Without the information from accounting, some outsiders may never understand our business, right? So we are very important. And the information is relevant and reliable, facilitates comparability and understandability. Also, we try to use this information, hopefully will be helpful to reduce the cost of capital and enable Australian entities to raise money from overseas, compete effectively overseas as well. Actually, this cost-benefit analysis was from the ASIC Act that requires a WLSB to carry out this cost-benefit analysis. However, since we are adopting IFRS, so that's not really necessary because we have entirely adopted that one. We may just adjust a little bit to fit Australian settings, but overall we are adopting the IFRS. Once the WSB makes a standard, it's approved by, yes, the Parliament, all right, the Commonwealth Parliament. Directors are required to ensure the company's financial statement comply with the standard. Okay, how about they don't agree with the standard? You know the standards was set in a unified form, right? So all the firms are required to do, if they have this type of transaction, they need to do this way, right? How about your company is really unique, special, and there are some transactions may not fit that standards? Can you just say no to the standards and use your own way you think is better to be communicated with the investor? No, you can't do that, because otherwise you're violating the standards, that's violating the law, right? Then what you shall do? Do whatever the standards require you to do, right? And also, if you feel that could be some additional information more useful, relevant, you can provide them in the notes, all right? We also have notes. So if you believe the standards are not appropriate, you can provide in the notes, all right? So in the US, they have the gap. Do you understand the US standards is different from our standard? Do you know that? The US didn't adopt IFRS. They have their own accounting standards, which is called GAAP, General GAAP. What is that? General Accepted Accounting Principles. Very good, yes. So that's GAAP. All right, that's what they use. And they have, if you look at their disclosures, sometimes they have GAAP earnings, which is exactly following the standards. And sometimes they will have non-GAAP earnings, which they believe is more appropriate. But no matter how appropriate that is, you still need to have the GAAP earnings, okay? So you need to follow the standard. If you feel something else, some information might be more relevant, you can provide in the notes, okay? But you have to obey with the standard. Yes, we adopted IFRS in 2005. Since all the European unions requires their members to adopt this one, we adopted as one of the first countries who adopted these standards. And Australian standards are identical to that, with just a little bit exception. So WSB contains additional paragraphs relating to the public sectors and not-for-profit entities, and paragraph related to RDR. What is RDR? We call them reduced disclosure regime. Because the whole standard, if you follow, they will require you to disclose a lot of things. And in Australia, because we also have some public sector non-profit entity, and maybe we have some firms in private firms, then we probably don't need them to disclose that much. Then we have the reduced disclosure regime, okay? Reduced disclosure regime. I'll touch on that later. As a result of adopting the IFRS, so now if you look at the coding of WSB, you will find out some of them is coded as 1 to 99, some of them is coded as 101 to 199. Some of them are coded as 1001 and 1099. So I'm not requiring to memorize all the code So which number is that standards? I'm not requiring to do that. But it will be good for you to understand how did they come from. How did they come? Where did they come from? So the 1 to 99 actually is exactly equivalent to IFRS. Okay? So that is equivalent to the IFRS. So if you see WSB number 1, that is the 2005 IFRS number 1. Okay? If you see number 99, that is the IFRS number 1999, sorry. WSB, when they have 100 plus. So the 100 plus was coming from the predecessor of IASB. Do we know IASB? International Accounting Standard Board, which produced the IFRS. Okay, that's the International Accounting Standards setters. Okay, IASB. So preceding the IASB, there was another body. They have already got this IAS, the International Accounting Standards, before the IFRS. Okay, so the predecessor of the IFRS is the IAS. And the IFRS is still developing. So when they haven't developed to that area, they use the previous one, which is called IAS. If Australia's standards are adopting that IAS, the coding would be 100 plus. Is that clear? All right. If they are exactly following the new IFRS, that's coded from 1 to 99. All right. And if that's from previous international standard, which is IAS, that is coded 100 plus. If it's coded as 1000 plus, that is unique in Australia. Okay? If that's 1000 plus, that's only in Australia. That's the Australia developed ones. All right. No international equivalent. So now you won't be confused when you see the standard numbers. We don't have over 1,000 standards. The reason we gave the code like that is just to differentiate the sources that come from. All right. Okay, so yes, IASB is independent, privately funded accounting standard. It's overseen by the IFRS Foundation. So the boss of WSB is Financial Reporting Council we just discussed, right? The boss of IASB is this IFRS Foundation. Okay, they need to be supervised as well. So they replace the previous standard setter, which is called ISC. So this just kind of the background knowledge you'd better to have, because you are learning accounting and this is the international environment. So you better to understand how do they come from and what are happening worldwide in accounting standards. IASB, now you know this is the standard setters for IFRS, right? Do we accept that? Do we have the knowledge of that now? IFRS, then the setter is the IASB. Okay, the IASB has the, except for the IFRS they issued, they also has an IFRS interpretation committee. So they have the interpretation committee, and they offer the official interpretative arm of the IASB. They review on a timely basis accounting issues that have risen within the context of current IFRS and provides authoritative guidance on those issues. So they provide more details for the standards application. And they provide guidance on issues not covered in IFRS. The IFRS can't cover all the real transactions worldwide, right? So they may provide some overall guidance on those issues that haven't been covered by IFRS. And they provide interpretation of the existing requirement. So whatever the standards you have, you may also need to see if you do check the standards, so that is the formal documents, the standards, it's written in a very legislative way, right? So if you read them, you will find out the standards always have some examples to explain that. Otherwise, you won't see. Like in my class, I will always give you examples. I won't just introduce the principle and the standards, that's it. Then that will be very, very difficult for you to see. So I will always give you the examples so you'll see how do we apply those standards, those principles, all right? So in standards, they also have that, and they will have the interpretation committee for the existing ones. They interpret how can you use them, all right? And the interpretation committee's interpretation also adapted by WSB to suit Australia's environment. Yes, again, the interpretation also have the force of law, Okay, have a quick quiz. I will check. The main benefits of Australia adopting IFRS may include ABCD, increase in comparability of financial reports prepared in different countries. Would the unified standards provide some comparability? Yes, right. We are all saying the same language, right? So I can compare your number with my number, right? Reducing financial reporting costs for Australian multinational companies. What does it mean? So if I'm a multinational company, I might be listed in ASX, I might be listed in Hong Kong, in the US, in India, in China, whatever places you want, right? European countries. So I just need to prepare for one set of statements. Otherwise, I have to speak with the two different standards, then that will be very costly, right? Removing barriers to international capital flows by reducing differences in the financial reporting requirement. Would that be? If we all speak the same language, would that be easier to communicate? If we have better communication, can we become friends? Am I trusting you in using my money? Might be easier, right? So that's why all of the given answers are correct. Okay, conceptual framework. What is conceptual framework? Conceptual framework is kind of the overarching principles for all the standards. It prescribes the nature, function, and limits of the financial reporting. Its purpose is to provide a coherent set of the principles. So the standard, standards setting are developing, right? It's developing. And how can I make sure standard 1, standard 2, standard 3 are following the same principle? So each standards are dealing with some specific issues. Now all the standards together, they need to have some consistent principles. The conceptual framework prescribes those principles, okay? So that all the standards have the consistent. All right? And they will assist preparers deal with issues not addressed by the standard. So the standards try to cover a lot of common things. But if some specific things happened and standard doesn't cover that, as a preparer, that is the transaction happened in my company. I need to do something, right? If I need to do something, what principles I should follow? Conceptual framework listed the quality of the information you need to provide. And there are some recognition and measurement principles you need to follow, okay? So that is the preparer. what we are learning here in any course, basically that's all regulated in the standards. But if one day you really grow as an accountant or CFO, you have a lot of judgment to make. All right? But without learning the fundamental principles, the fundamental standards, you wouldn't be able to reach that high. So that's why this course is important as well. It also assists auditors in forming an opinion in compliance. We do know we prepared financial statements. Auditors need to audit to provide their audit opinions. Then how do they know our accounting records are reflecting the transactions we have, right? So they also need the principles to follow, so for auditors. And the users, if you understand the standard, you know what information they are providing, so it will help you to interpret the statements. So this is why we need to have this conceptual framework, because it prescribes the nature, function, and limits of the financial reporting. And the framework must be adhered by the preparer of general purpose financial reports. What is the general purpose financial reports? So basically, think what else? What other accounting courses have you learned? Management accounting, very good. Is that general purpose reports? Why do we have some internal management reports regarding accounting? Management accounting reports, do we have some? Do we have? Think about it by yourself. If you are running a business, do you need to have your management accounting? Of course. Otherwise, how can you run your business? You need to know your cost. You need to know which method you can use, right? So that's cost accounting, that management accounting is definitely needed. Are they for general purpose? No. They are for specific purpose, mainly for management purpose, right? If you are running the business, you are managing the business, you need to have that management accounting in place, right? So that's the specific purpose of reports. Our reports is financial accounting. That's the general purpose of financial reports. So the investors, the outsiders, they can get the reports. The debt holders, they can get reports, and then they understand what's happening in the company. That's the general purpose financial reports, okay? That's different from the managerial accounting or internal reports. Australian conceptual framework, we adapted FRS one, right? And we have a little bit more. So we have the framework for the preparation presentation of financial statements, which incorporates the AISB's conceptual framework, okay? Basically equivalent to that. And we have another statement of accounting concepts one, which gives the definition of the reporting entity. So like I said, reporting entities in Australia not only include the corporate, it may have some other entities, right? Like we said, we may have the government, we may have the non-for-profit, so these are the reporting entities. And also, I mentioned reduced disclosure regime. That will require the reporting entities comply with different levels of the standard. Okay, we have Tier 1, Tier 2. Tier 1 needs to fully comply. Tier 2 just need to use the reduced form, reduce the requirement. Okay, that's why we call reduced disclosure regime. Okay, so that's the SEC 1 defines the reporting entities. And the conceptual framework includes 4 chapters. Okay, they have the objective general purpose financial reporting, they define the reporting entity, they have the qualitative characteristics of useful financial reports, and they have the framework, which covers the remaining issues. All right, so that's about the 4 chapters. The objective of the general purpose, this just intend to meet the information needs common to users who are unable to command purposely prepared reports for them. If you are a shareholder, you can't ask them to give you a specific report. they will provide this unified general purpose report. All right, if you're management, you may say, okay, give me this cost analysis. That's a different thing. All right. And reporting entities in Australia is defined by the SEC1. That's the entities in respect of which is reasonable to expect the existence of users who are dependent on the general purpose financial reports for information so that they can make evaluation of their resources allocation, their investment. Are the small companies reporting entities? How do you think? Normally, they are not. All right. If you're a small proprietary company, you don't have the public fund to be used, or you're not publicly accountable for something, and your shareholders are limited, so you probably don't need to file this general purpose financial reports with the regulators, right? But in some exceptional cases, if they are required, they must. All right. Who can use this general purpose financial reports? Whoever you can think about it. Stakeholders, shareholders, investors, debt holders, customers, suppliers, government. Can government use their reports? For what? Multiple purpose, at least tax, right? Taxation office need this information, right? So there are a lot of different users. The basic assumption is they think the information, the users are assumed to have a reasonable knowledge of business and economic activities and accounting, and they have a willingness to study the information that we provide. But this assumption, reasonable or not? We don't know, right? If they never studied accounting, they might be able to understand a little bit, but maybe not that profound knowledge they have as we have, right? But we just assume they may understand something, then you communicate. Otherwise, we can't communicate, right? We have two tiers in our disclosure regime. Tier 1 is about publicly accountable entities. Tier 2 are all the other preparers. What are the publicly accountable entities? So first, they may issue something in the public market. Debt, shares, equities. If they issue something, they are publicly accountable because they are using some funds from public, right? They are publicly accountable. And some others may hold assets in a fiduciary duty for the outsiders, like some governments. They don't hold your equity or liability, but they do hold some assets. That's the taxpayers' money, so they are also publicly accountable, right? Or maybe some trust fund, some charity, if they do hold some assets from public, they are also publicly accountable, right? So that's the publicly accountable entities. Tier 2 are just all the others. They probably might be running a private company, a small proprietary company, so they don't need to follow the full disclosure requirement. So here is the diagram you can see. So here, you please notice this is divided by factors. By sectors. Public sector, private sector. We do mention public company, private company, right? When we say public sector and private sector, that's different from public company, private company. Do we see that? Public company, they have public funds they were either listed somewhere or they have some way to collect the public fund, like the debt, the shares. That's public company, all right? And private proprietary company, they have limited financing resources. When we talk about sectors, the public sector, private sector, all the companies running after profit, they are running in private sector. but they might be public companies. Do we see the difference? So they are running in private sector because they are running after profits. That's a company. In public sector, in private sector, but they might be public company because they raise money from the market. Clear? So we look at this diagram through the sectors, either public sector or private sector. If you are for-profit private, either public company or private company, you are in this column. Okay, you are for-profit private. If you are publicly accountable, like you raise money from public market, then you should full disclose, following the full disclosure requirement. If you are not public company, small proprietary company, you just have the tier 2, reduce disclosure. All right. If you are not for-profit private, like you are a small charity fund, you are private, but you are not for profit, then you have the choice to do full disclosure or reduce disclosure. All right. If you are in the public, no matter you are for profit or not for profit, like we know the trust, the charity, they may have also profit, right? They may also run after profit, but they are public funds. So in that case, all the government fund, the government's owned enterprise, they are also go for profit, but they are in public sector. If that's the case, then they are in this column. So the federal, the state, the territory governments, or local governments, they need to following the full disclosure requirement. If they are entities other than these governments, they can apply for tier 1. Clear? Reduce disclosure. That's what's unique in Australia. And the qualitative characteristics of financial reports, we have two types of characteristics. One is called fundamental, the other one is called enhancing. So fundamental, we have two characteristics, relevance and faithful representation. So relevant, reliable, you hear a lot, right? Relevance and faithful representation. And enhancing values, qualities include comparability, verifiability, timeliness, and understandability. So look at the relevance. What kind of information is relevant? The information is relevant is if it's capable of making a difference in the decision making. And it has the predictable value and it's capable of making the decision no matter you use it or not. That's your choice, but it's capable. It has a nature of making the difference that we call them relevant. Faithful representation, it needs to be presented completely, neutrally, and free from error. So you say, I will just disclose this information. I may have 2 events, but I only disclose 1 event. Truthfully. That's not the faithful representation because another event has effects, right? You need to have the complete and you need to be neutral. Your boss said, okay, our profit figure doesn't look good. Can we make it look better? You are in favor of your management. You should be neutral to any parties. Okay, just reflect what it is, right? And it should be free from errors. Then it means the faithful representation requirement. For the qualitative comparability, so it will identify the similarities and differences in the different reporting. Then we say they have the comparability. And it should be verifiable because the verifiability will help assure the user that information physically represents the economic phenomenon that it purports to have to represent. Timeliness, okay, so if you have a flood in this year or in this quarter, you only disclose in 2 quarters later, investors have already suffered, right? So you need to have the timeless quality in your information. And it needs to be understandable, so it will enable users to comprehend the meanings. The elements of the financial statements, how many elements we have in accounting? 1, 2, 3, 4, 5. Right? You've learned that in your prerequisite, assets, liability, equity, expenses, right? And income, right? So you have all these elements and the definition, how to recognize them, you have all learned in your prerequisite. I'm not going to go through. And the measurement is just provide some information for you to get familiar with those things, okay? And for the measurements, we have some element, some measurement number, a number of measurement bases, like we have historical cost.